Good evening, student. Today I am continuing the fund flow statement. Last day I have discussed how the fund, whether that comes into the enterprise or used into the enterprise between two balance sheet date. By preparing a statement between those two dates showing the changes in the working capital, if working capital reduce, then there is a sources of fund. If working capital that get increased, then we have put fund into the working capital between those two dates. Now, after preparing the statement showing the changes in the working capital, next item we will pick up to show, we will pick up the net profit of the enterprise for the next year, that is the last year, preceding year. Net profit we will start with, and we will try to show fund from operations. Remember, here we are preparing fund flow statement between two dates. In the examinations, you are given the balance sheet on two particular dates. Assuming you are given the balance sheet for any enterprise or company on 31st March 2019, as well as the balance sheet you are given 31st March 2020. The practical part I will start with tomorrow or day after, and there I will show how the fund flow statement is to be prepared. Both way, you can put the fund flow statement in the horizontal form or in the vertical form. Here we are to get match the total sources of fund and total utilization of fund between those two dates, that is 31st March 2019 and 31st March 2020. Now we are having the net profit for the year ended for any particular company, say ABC Limited. Net profit during the year ended on 31st March 2020, you are given like 50 lakhs or 52 lakhs. Here we are required to find out whether the fund which evolves from the operation, that is fund from operations, or fund used up in the operation or exhausted in the operations. Now, vertically I am showing like one side we will show the sources of fund, another side we will show the application of fund. If the fund from operations become a positive figure, then it becomes sources of fund. If it's become negative figure, that is within brackets we generally use in the financial management as well as in accounting, we do not put generally negative sign. If you put also negative sign within brackets, then that means net profit minus within bracket, say for 30 lakhs, that means it is the loss. Here net profit will start up. Now you must have understood trading account, profit loss account, as well as if we have started manufacturing concern, then manufacturing account. Now leaving manufacturing account, trading account, and considering the profit loss account, the net profit you are given. Net profit after tax or after provision of tax. Now that is PAT, profit after tax for the year. Suppose you are given 52 lakhs. Now certain item you have to add up with this net profit. certain item you have to deduct from this figure to get out the fund from operation or to arrive at whether fund used in the operations. Now let us see. Now on the debit side of the profit loss account, we will find out various non-fund item. Now, but what is the meaning of non-fund item? Let's see. Non-fund item means the items which are visible in the profit loss account debit side as an expenditure and losses, but there you have really not utilized any fund or say pure cash loss you have not utilized. For example, clarifying this, for example, say depreciation. Depreciation is non-fund item. Every year on the fixed asset we provide depreciations and we write on the debit side of the profit loss account to depreciation on the fixed asset, as well as similarly we write to amortization of fixed asset. Now what is depreciation and what is amortization? I will just brief here. Depreciation means diminutions in the value of fixed asset, because in the net profit we arrived at after considering all type of losses. Now in depreciation, truly speaking, you are not losing any money because fixed asset acquired some years back and you already expended fund or say cash for the acquisition of fixed asset, but there is a diminution in every year. So against the income or the revenue of the enterprise or the company, you have to consider what is the diminution value of your fixed asset, and that we write as to depreciation on the debit side. Now depreciations, how it is charged, how it is calculated, that will be discussed in the accounting. Here, what are the amount which came as depreciation, that will add up with the net profit, because truly speaking you have not utilized any cash. Now net profit after tax. Now actual provision of taxes depending upon the net profit, as a some percentage we calculate, say 30%, 25% or 22%, depending upon the requirement, say how the government is formulating in the budget how much tax to be paid on the net profit by the different enterprise from year to year, which vary from year to year. So that before tax, whatever the net profit on that, calculate say 30% or say 20% or 25%, we calculate depreciation. Now you are given the depreciation amount in the profit loss account. Sorry, you are given the tax amount in the profit loss account. So simply we will start with statement showing the fund from operations oblique fund utilized in the operation, obviously between those two dates. Now net profit after taxes add provision for taxes, so we get the net profit before taxes. And non-fund item depreciation, what are the depreciation amount you have debited into your profit loss account, that to be added up. Next, amortization. Amortization means there is a diminution in the fixed asset but which are intangible in nature. Now intangible in nature, we can say the patent, we can say the even we write off the goodwill, even copyright, even like right to utilize of some expenditures which the enterprise already expended for acquisition of some knowledge or some know-how. So that we have like one know-how 5 years. Okay, we'll derive the benefit. So divide total expenditure divided by 5. So every year into the profit loss account you are eligible for deduction of 20%, because 100% divided by 5 is the 20%. Now to amortization or know-how. So that is the amortization on the intangible fixed asset. Again, the preliminary expenditures, such type of amortization. The expenditure on the issue of share equity, while the company issued share initially, and those expenditure appearing into your balance sheet, and that you can write off also. So those type of non-fund item you have to add up with your net profit, that is profit after tax, add provision for tax, and thereafter all these items to be added. Even we add up like provision for depreciation, also loss on sale of fixed asset, any other abnormal loss we add up, because for that you have not exhausted any fund or you really lost in the cash, I say. Now, truly speaking, there is a loss, but that to be shown, the loss in cash you have utilized in the acquisition of such asset if abnormally lost. So abnormal losses added, loss due to the fire sale, loss due to the accident sale. So all these items, non-fund items, depreciation, amortization, everything you have to add up. So you get the net profit before considering all these non-fund items. From there you have to deduct like profit on disposal of fixed asset, insurance claim which you have already credited in the profit loss account, as well as other type of non-operating income you have credited into profit loss account. So you get the exact figure of the fund which generated from your operation. If it is positive figure, to be utilized, to be used as fund from operation. If it is negative figure, then clearly it is the fund you lost in operations, and that will be shown on the utilized side. Now I will consider other items like equity under the head share capital, equity share preferentials. That means you issued, raise the fund to sources. If you have redeemed the preferential or redeemed the loan fully, partially, or debenture partially, or by means of lot drawing utilizations. So we can show the fund flow statement under vertical format. So one side, right hand side sources and left hand side the utilization, and total sources should have been utilized. That is why balance sheet is matching. Balance sheet matched. That means whatever fund you got into your hand or into the company's hand, which has been utilized. Okay, day after tomorrow I am coming up with the practical part, how to show under vertical as well as under horizontal format the fund flow statement, which generally comes into your CA examinations, CMA examinations, company secretary or degree courses in the Indian universities. I will be glad if you understand by solving 1, 2 or 3 problem from my side. If you understand everything, I will be very glad. Please comment me if there is a lack or I am lacking to make you understand, then I will try to improve. Thank you very much. Day after tomorrow I will start with, I have already explained you now and in my previous video, statement showing the changes in the working capital, whether it should be a source or application of fund. And here fund from operation statement or fund used in operation, it should be used as source. if from operation fund, and if lost in operation, then it will be an applications. And other sources and application I will consider taking two consecutive last date of years of an enterprise balance sheet, and I will try to show. Thank you. Good night, student. Thank you.